Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, the 11th of February, 2026, just getting on to 6:30 p.m. Central Time. So the metal market's a bit lower. Gold down $18, silver down, it was down over, as you can see, nearly $2.50. Copper market a little bit higher and down in the platinum market. As you look at that, we can see the dollar rallied today. Now, one of the big events of the day was certainly the U.S. jobs report. We have a CPI report coming out on Friday. That's going to be very important. But the jobs report, the headline looked fabulous. 130,000 new jobs versus the estimates that fell, I thought, between 50 and 70,000 new jobs from all that I had read. So you'd say that's great. It is until you saw the revisionments for 2025. And in those revisionments, they took everything down for the whole year. You gained just shy of, 185,000 jobs? That isn't very good, 15,000 a month. We haven't done that, I think, in a couple of decades. So this is not the best environment that you can imagine. And we saw today action. Now, let me get to what I'm talking about by talking here first. We're going to get the jobless claims in the morning. They're looking for a decrease. The existing home sales for January will come out at 9 o'clock. EIA natural gas report, you're looking for an increase in what you're taking out. And that's because of all the cold weather in the Midwest, the East Coast, they even got down to Florida. The Treasury, the monthly budget came out with a surplus, no, with a deficit, $95 billion. So the outlays are still bigger than what we're taking in. What would this be if you didn't have tariffs? Think about that. Now, here's what I'm getting at. The House of Representatives today, in a rare move, rebuked the president. They said they want tariffs on Canada to end. Whoa. In October of 2025, the Senate voted to do that. They said that the issue with Canada is not an emergency. They should not be tariffed, and now you're getting another group. Why is this occurring? Midterms. Everybody's looking at early election results that are happening in different states, and the Democrats are winning. So the Republicans are going, I think I got to distance myself. Now, the president has said anyone that distances politically, they are gambling because he has wrath to reach. Okay, we will find out how this is all going to play out. For 1 minute, I don't think if it goes to his desk, he won't veto it. And will they have the guts to override his veto? I don't know. The president today also said he wants to end USMCA. As you know, he met with President of Israel, Netanyahu. I don't know if you're aware of it. He's met with him in the past, I think 12 months, 7 times. That's very unprecedented. So very interesting what's going on there. So as we come back to the markets, you're still getting a bit of a bid in the energies. Why not? The U.S. is after Iran, and they have to worry about the Strait of Hormuz. Are the supplies of oil building dramatically? Probably close to 1.5 million, 2 million barrels a day. But the fear that you won't be able to get oil if an all-out war with Iran takes place is overriding all that. In the natural gas, you're stuck here in the $3 range. Bonds and notes today, they went up in the morning big, and they gave back all of that, okay? And then the yields changed on you. So what's happening here is the market's coming to grips that there is zero chance of the Fed cutting interest rates anytime soon. Stephen Moran, the president's most recent appointee, as you know, he's saying, no, even with that it can happen. And his argument isn't a bad argument. 185,000 jobs for all of last year. One big jump this month doesn't prove that that's a trend. You have to listen to all sides of the story. When we take a look at gold, I think the combination of a U.S. deficit that isn't being resolved, seeing the congressional office come out today and predict where the deficit's going to be, and that we as a country are now not able to get balanced in any manner. This is not good. So I think that with the Mideast situation kicks the market up, not Midwest. When we take a look at where the market's at, it's basically caught in no man's land. You're caught here between the high and low and going somewhat sideways. When we look at the gold here, you can see that the swing line is still pointing higher, which is bullish. The market is staying over the 18-day average of closes. That too is bullish. The market is nowhere near the Bollinger Band, so they're not in play. And momentum is just slowly still coming up. So yeah, if you broke down, I'd look for support at the 5,000 level. But I think this market at any point can surprise you to the upside for the reasons that I'm giving you. When we look at the gold-silver ratio, I have made a statement, and I'll stick with it. I don't think you're going back down here for a very long time, if at all. That whole correction that came from 104 down to about 45 or 44 ounces of silver to an ounce of gold, you're back into the 60s, and I wouldn't be surprised that you hang there. In the silver market, you've got a market that's getting a rally off the swing line, but you're under the 18-day average, so it's a bear market rally, not really much more than that. When we take a look at the copper market, it's still looking bullish. Look at how industry is doing. Look at what we're seeing in the U.S. economy. These hires that are taking place are for industrial areas. They're not going into tech. That's very important. And what the impact of that is tariffs. More companies making goods in America. Of all, it could be American companies, non-American companies. That's what's going on to avoid that. And I think that's what part of copper is about. When we take a look here at platinum, I'm just seeing a market that's waving, a bear market rally. And in the dollar index, I would have gotten very bearish the dollar right this minute had the market been able to close a little lower. I will give you a number that I think can really get the bears going. Take out today's low. You had an outside day up. One of my courses, the Outside Day course, teaches a philosophy that I've looked at and I've reviewed over and over in the years. And when you have an outside day up and you take out that low within 2 business days, often before you go back for that high, you make a run to the closest moving average under it or a Bollinger Band. That Bollinger Band's down here. So until that's done, the market can rally back up to the 18-day average and fight a battle. We'll see which way it wants to go. I want to remind you all a couple of things. Number one, if you use TradingView, are you aware that all of these indicators I have, you can subscribe to? So it takes up one of your slots, let's call it that way. You get my swing line study. You're going to get the moving averages that I use. There's more that are in there than you see here. You're going to get Bollinger Bands. You're going to get window envelopes, and I do update my window envelopes for your subscription to this, and slow stochastics with my formula. It's all in there. There's one other thing, outside days. When you get an outside day, it can highlight it. You can turn off all these features one way or the other as you want, but it pairs together with everything that I teach. It's cool. I think once you use it, you get hooked on it. So why don't you give it a try? It only takes up 2 of your slots. You know what it is if that's a part of what you do. You go to iraepstein.com to do that. You can move your cursor up here at any time, or you can click over here if you're on YouTube. It'll take you right to our website. Go to the customer area on the top right, and you will see sign up for your TradingView. What happens is we'll see that. It's evening now. We'd see it in the morning. We would turn it on for you. We'll send you an email. You log out of your TradingView, back in, and it's all there. It's that simple. I'm Ira. You have yourself a great evening. Hope you watch the other videos, and I'll catch up with you first thing in the morning.